You're watching us here on Trading Hour. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, and with me, Ritu Singh, joining in from the Bangalore studios. Ritu, it has been a fairly weak day if one is a bull. Over the last couple of trading sessions, the IT index by itself has bounced down on the other frontline indices, and right now the Nifty is below that 25,600 mark as well. Though there has been recovery from the lows on the IT index, it's still down 3.5%. The Nifty is still under pressure because no supporting cast helping today, and the broader markets have it even worse.
No supporting cast today, Mangalam. Yesterday you had, the Bank Nifty trying to pull its weight, but today, it's red across the screen, and so sorry to disappoint Nigel and you, but those crisscross lines, it's only getting worse now. More than, almost 4.5, you could say. More than 4 stocks are declining for every 1 stock that's trying to advance. That's where we're at. A bit of a recovery midday, but, it seems like we're slipping again. The IT index, like you said, that's been the big drag. It's not such good news on the equity market front, but on the money market, if you quickly pull up the 10-year yield, we've seen a softening of 3 to 4 basis points coming in this morning. The yield, in fact, is below 6.7 after very many days. And that's because of the switch that was announced by the government yesterday. So keep all of that in mind as well as we get set, for the next hour. But Mangalam, you spoke with United Breweries earlier. Tell us about their numbers.
That's correct. So in a market like this, I think the only thing that the bulls would want right now is a glass of a cold beer. And that also did not come about in the third quarter, largely because of the weather-related issues. The management sounded a lot more optimistic about the current quarter and a bumper summer ahead. So let's go ahead and listen to what Vivek Gupta, the MD and CEO of United Breweries, had to say. The stock off the lows right now, one of the few ones which are actually at the high point of trade. Vivek.
We are a quarter away from the right level of growth. I think there are 2 things which are hitting the category. One is, of course, the weather, but most importantly, the second one is affordability. I can see the green shoots now because the state excise policies are getting released. Yesterday, we got the policy of one of the biggest state, Uttar Pradesh, and they have not increased any taxation on beer, and relative taxation on spirits have gone up, so which is going to help beer. West Bengal has released a policy in December. We're already seeing the category bouncing back there. We are seeing the category bouncing back in a couple of other states as well. So I think it's a combination of affordability and weather. We see January definitely and December, the category coming back to growth. So I really hope that the days of negative category growth are over, and we will see at least mid-single-digit growth of category in this quarter, and then hopefully a bumper summer based on the weather prediction.
All right, mid-single-digit growth in the fourth quarter and a bumper summer. Could you define the bumperness of the summer by quantity, and at the same time give us a sense on the premium side as well? Because the last 2 quarters, they've been very weak. It's been growing upwards of 25-30% in the past. Then the last couple of quarters, it came down. In the third quarter, was up just 1%.
Yeah, no, I would say that, at least 50% of India had more rainfall and extended winters. Like North, for example, had a double-digit decline in the category, and the winters were, the La Nina impact came. But we should not shy away from the affordability issue on the category. The taxation of beer relative to the entry-level spirit is the single biggest driver for this category as per our learning. I think in many states like Karnataka, Telangana, Rajasthan, West Bengal, Odisha, which contribute more than 55% of the sales in the category, the beer became expensive and more expensive as compared to spirits. Now, we have been working extremely hard with Brewers Association of India, working with the governments to really share with them the economic impact of beer, why beer is important for farmers, why beer is important for ecosystem, why one job in the brewery actually creates 98 jobs outside the brewery. So all of that is leading to a policy consideration where at least in many states, they are realizing they've gone overboard on beer taxation.
Right.
So we are seeing those changes coming out.
Okay. What about Telangana? You did speak about Telangana, but I hear from your conference call commentary that fresh issues around receivables have emanated. Can you give us a detailed, answer to that?
Yeah, on Telangana, we have actually got the old money, the 2024 money, almost 90% of that the government has paid us. which improves the quality of the dues. But the current dues are still mounting up to the same level, and we are in consistent conversation with the government because working capital is extremely important, especially in the coming beer season. But at the same time, I know when we are talking about the top line, we had excellent bottom line results. We actually clocked highest ever gross margin in the last 3 years. The EBIT actually went up by 87%, and there is a significant structural improvement we have done due to localization of our portfolio and premium mix. So I think on one side, while the category has slowed down, at the same time, structurally, we are actually in a much better position. And that's why what I mean by bumper summer is that we are actually prepared as a company in terms of supplies, in terms of stocks, in terms of our portfolio. If the weather, leads to better consumption, we are ready to supply that.
Right. So could you give us a sense on the next couple of quarters? Mid-single digit volume growth, slightly higher than mid-single digit volume growth in the summer months if the weather is conducive. Premium, how much does that grow at? What's your near-term outlook on margins? And if you could give us an updated market share on both premium and overall.
So overall, let me start with the market share. In 2025, United Breweries grew 90 basis points of all India market share, which is phenomenal. This is the highest market share growth at a country level in the last 15 years. So we got actually 90 basis points of overall market share. On premium, we grew 23% on volumes, which is again leading to almost 200 basis points of market share on premium. So both on overall beer and premium, we are growing market share. We expect that 20% plus growth on premium to continue because we absolutely have a lot of opportunity on further driving Heineken Silver, which is a flagship premium brand, Amstel Grande, expanding in most states, and Ultra Max, which we are localized now in most of these states, and we are seeing this significant brand power. On top of that, we actually have also launched Kingfisher Strong Smooth, which is actually an upgrade version of Kingfisher and more designed for the younger consumers. We have launched in Rajasthan, we have expanded in Karnataka, we are going to expand in more states in the coming weeks. And so we feel that the revenue mix and premiumization story will continue, and we expect that to be in the tweens as we did in the last 25, and our goal is to further accelerate our premium business. On the category growth, as I said, that look, affordability and season is a big one. The big states are yet to come with their policy. We are hopeful they understand the impact of affordability on the beer, and that's why right now we are planning planning scenarios.
All right.
Is it mid-single digit to above? We are ready for both.
Okay, and Visi coolers and bottle returns, if you could give us an updated number on that before we let you go.
Yeah, on the bottle returns, we have made almost 200 basis point of improvement sequentially, which is also reflecting in the margins. So in the 220 basis point margin increase, we believe that almost half of it is our structural improvements, which will carry on, and at the same time will be very competitive to serve the market. On Visi coolers, there are more than 35,000 stores who have UB Visi cooler. One data point is we have actually implemented 10x more Visi coolers than what we implemented 3 years back. So we are making a lot of progress on our execution strategy as well as our overall structural health of the business.
All right, so they're preparing for the structural health of the business, Visi coolers, premium products, and laying out everything. But Ritu, the question is whether there is demand or not. Are you up for it this summer?
Well, there's always be demand comes summer. But Mangalam, let's do one thing. We'll slip into a short break. Up next, we're going to focus on the bond market with Panisha Gupta. So stay tuned.
And India Bonds presents Bond Street.
Welcome to Bond Street. Joining us on the show today is Dr. K. Paul Thomas. He's MD and CEO at ESAF Small Finance Bank. Mr. Thomas, hi. Thank you for joining in. At the onset, the ESFA's Q3 performance has stood out. What would you say have been the biggest drivers therein?
Thank you, Manisha. Last 2 years, we were on a transformation path because of the asset quality issues we face in our microfinance book. We have taken various steps. One to major was to diversify the asset towards a more secured portfolio. So because of the consistent efforts, we were able to bring down the microfinance portfolio from a 70% to 37%, and increase our secured book from 45% to 63%. So the asset like agri, mortgage, mobility, and MSME, and also the major part comes from the gold loan growth. So that is one aspect. And the second was we continued our efforts in rebuilding our microfinance portfolio by introducing the SRO has introduced guardrails in 24. So we have very strictly followed those guardrails. So the new microfinance book is very well performing very well, and also continued our efforts in the bank own channel and the BC channels for the collections, the NBA collections. So that has also really helped us to turn around the bank.
As you mentioned, you pivoted towards secured asset class over the last 24 months, particularly exposure to gold loans. How has that experience been?
Yeah, building up a gold loan, especially we have 50% of our branches are in South India, and gold loan is a very, very well-known product, and resources were also available. So talents were available. So we were able to scale it up quickly, and gold loan demand, and generally the small business owners and farmers use gold loan as a bridge funding. It's quite they are all known to very well known this product, and we had good branch network also, so we were able to scale it up.
How would you say does ESAF's overall funding mix look today, and how is that mix evolving for you?
The overall mix today is basically mostly from CASA. It's 24-25% comes from CASA. Then the major part comes from term deposits. So out of the term deposits, around 24% is NR deposits. Then we are also to build our we also use borrowings mainly interbank borrowings as any other bank does. We also do that, and also we avail the refinance facilities from NABARD and CP, the development finance institutions. We also use that. Also, we have a part of it comes from Tier 2 capital we have raised. Last financial year, we have raised around 415 crore of Tier 2 capital. This was mainly to augment our capital adequacy. Even though the capital adequacy requirement is 15%, we maintain about 20%. As of now, it is 22%. So this since we were going through turbulent times, raising Tier 1 capital was a big challenge. So the Tier 2 was helped us to improve the capital adequacy. So this is almost this is the way we fix our funding mix.
Mr. Thomas, also, how would you say you have seen the corporate bond market evolve with the rise of SEBI-regulated online bond platform providers especially?
Yeah, as in India, it is very interesting to see the online bond market is getting momentum. So so far, mostly bond market investors were only institutional investors and HNI investors. Now, the online bond market platform will open up to a large number of retail investors can participate in it, and this will definitely evolve. The debt market will going forward will definitely evolve and improve, and mostly since a large number of the Indian savers are moving to the capital markets, banks will also will have to depend on bond markets going forward to fund their liabilities.
And finally, Mr. Thomas, ESAF has recently raised funds through a bond NCD issuances. How was the investor response? What was the core objective? And what's the key takeaway for bond investors from there?
It was a very good response. The last issue was 150 crore Tier 2 bond, and we got a very good investor response. Even during these difficult times, investors had a confidence on the fundamentals of the bank. And it was, as I mentioned earlier, it was mainly raised the Tier 2 bonds for augmenting our capital adequacy ratios.
Fair point that, Mr. Thomas. Really appreciate your time here today at CNBC TV18. Thank you so much.
Thank you very much.
CNBC TV18 and India Bonds presents Bond Street.
Welcome back. Carraro India has delivered a strong quarter. Double-digit revenue growth is what we've seen in this quarter. Balaji Gopalan, the Managing Director of Carraro India, joins us now on their numbers and the way ahead. Mr. Gopalan, thanks very much for being here. The outlook seems to be turning, more positive for the tractor industry. We had Eminem telling us that they see more than 20% industry growth in this fiscal. How are you seeing demand shape up across your agri driveline portfolio? And also, what kind of momentum are you seeing on the construction equipment side?
Yeah, thank you very much. My pleasure to be on the CNBC show today. As you rightly said, yes, you have captured it that the market is booming. The good monsoons, the reduction in the GST is all creating a sentiment in the farmers to go in for tractors and mechanization. India is going through a phase where agriculture, mechanization, farm efficiencies are going to be the focus to achieve food security for the country. So it's been doing very well for us. At Carraro India, the revenue grew by 21% in these 9 months. And we're looking at a very strong future because the transition from two-wheel drive to four-wheel drive tractors in India is gaining momentum. So the technology absorption is taking place. And today, roughly from unconfirmed sources, we know that the four-wheel drive market penetration has reached as high as 25% out of the 1.1 million tractor industry that exists in India. So the going is good. The future year, our projections are quite strong. We are getting strong demand from the market to book capacities at our end. And to that reason, you would have seen that we have to go in for an expansion, capacity expansion this year to meet the market demand. So all in all, going very well on the agriculture side. As far as construction equipment is concerned, the market was down overall. But luckily for Carraro India, we had got into, at a very strategic point, into the teleboom handler business. And teleboom handler business is globally growing very well, and it should start growing in India. Currently, it is at less than 1% of the construction industry market. So we did very well with exports in teleboom handlers to one of the largest OEMs in the world. So that picked up, gave us the momentum in exports. Second, backhoe loader, very surprisingly, in India, because of the long monsoon, the market was down. But for us, we could export because there was a big demand coming in from Latin America and China. So these were really enablers that helped Carraro reach in these 9 months growth of 21%. And the future, we are very, very excited. And in fact, it is challenging for us to meet the market demands, which we will certainly do.
Sure. You've given us some strong numbers. Is that why, you've sort of indicated that you will surpass that FY30 revenue guidance? So now,
Yes.
if you could put numbers to this outlook that you're very optimistic about, what kind of growth trends are you now looking at?
See, we hope to close this year slightly above the guidance that we had given. So I feel we should reach a figure as of March 31st. We should close close to 220 to 25 million euro, which would mean 2,250 crore is what we are looking in terms of Indian rupees. So the going seems to be good, and we will be exceeding the guidance that we have been giving. And we are very confident for the next year as well in the long-term guidance that we have given in the past. We will be meeting it for sure at this point in time, but we hope to probably even exceed the guidance given for next year.
Could you give us a sense, Mr. Gopalan, then what is the kind of over and above the guided band, how much do you think you'll beat it by? And also, if you could give us a sense on what the kind of volume growth was in the third quarter. At the same time, what's your outlook on the margins, given the surpassing of expectations on the top line? Do you think that'll flow down to the bottom line as well?
No, there will not be a slowdown in bottom line. I have seen some reports where they are talking of a decline in our PAT in the Q3 results, but that is largely because it is an industry-related labor code provision that we have already taken. So in real terms, our PAT and EBITDA is doing well. In fact, as guidance for the year, we are sticking to the original guidance of reaching close to 11% that was given. So we are targeting anywhere between 10.8, 10.9, 11. If we reach 11, I think that will be a good story that we could bring to the market.
Next year will be 12%. And what kind of revenue growth are you guiding for next year?
8 to 12% is a very reasonable growth we are projecting. Our capacities also are aligned with that. The market order book that is coming to us is also talking of 8 to 12. As we move towards the next year, mid-year, we will have a clear confirmation on that. But 8 to 10 is something we can start off now. And the EBITDA growth, yes, we had spoken about 12%. That is surely our target. And by the way things are moving and the product mix that we are getting for next year, I am sure we will reach our EBITDA guidance that we are giving. The future is exciting for us. So when there is growth coming in, when there is momentum there, I think all these profits and margins we work on efficiencies, and they give the result in the end. So
take that point entirely. Mr. Gopalan, thank you so much for joining in. 8 to 12% revenue growth next year with 12% margins. We'll take a short break, come back. We'll also discuss the market fundamentals. George Thomas, fund manager from Quantum AMC, joins in on a day where the markets are seeing a sharp decline.
Welcome back. George Thomas, the fund manager from Quantum AMC, is with us now to talk more about market fundamentals. Mr. Thomas, thanks very much for being here. You know, these big macro headwinds as we start the year are out of the way. We've already heard the budget, the big trade deal overhang, that's sort of gone now. But the volatility continues. Where do you see the market, say, in the near to medium term? And also, in terms of sectors, where are you finding pockets of opportunities? Where are you staying away from, especially with all this talk around AI impacting the IT sector?
Yes, thanks for having me on the show. As you said rightly, most of the macro headwinds seems behind us. And when we look at valuations and how things are likely to pan out, given that there has been a series of measures to boost consumption in the economy, our sense is in the medium-term market should do reasonably well. But from the impact of AI on IT services, our sense is it is more noise than what is actually happening. If I were to borrow the comments from one of the tech leader, from an anecdotal perspective, if I were to explain what is happening with all the fears of AI on IT services, So if we want to assume that we will have to create a township in central Mumbai, which is spanning, let's say, 2-3 acres, it might take us 10-12 years. But if I were to do the same thing in the outskirts of Mumbai, where it's a barren land, I might be able to do it in 3 years. This is precisely how AI is likely to impact the services. A lot of times, people project productivity and how transformation can happen on a standalone basis, ignoring that there is an existing systems and enterprise which enterprises have in place. So historically, what we have seen is this kind of fear has happened even when SaaS or ERP came into picture, where you would wipe out IT service revenue. But the very fact that it has to displace some existing thing and it has to integrate with the existing tech landscape, that could definitely make the opportunity much larger than what anyone can imagine at this point.
Right. When we look at the other opportunities here, after a big correction of almost, 50 to 60% in a lot of these broad cap names, which have not done particularly bad from an earnings standpoint, valuations have become a lot more comfortable. Are there any screaming ideas here?
Yes, of course. If you look at the deal wins of the top 5 IT players, of course, each of them have different ways of reporting the deal wins, but it gives a good directional sense. So if you look at the trailing 12-month deal wins for the top 5 players, as of the recent quarter, it is up about 9%. And if you look at the revenue growth of some of these SaaS players, where the market is supposedly worried about disruption, even that is growing at healthy high single digits and some of them even at double digits. So none of these data points kind of point to a sharp deceleration in terms of revenue trajectory. And even if you look at the headcount addition, so those are, of course, the macro uncertainty is still there, and that has been there for quite a while. And our sense is as enterprises see that the current macro setup does not deteriorate from the current level, we could probably see the discretionary spends come back. And to your question, some of the large cap IT names, the larger service players, which has corrected to a larger extent on market fears that their business could be disrupted to a higher level. My personal sense is those might be the players where the opportunity could be the maximum.
All right, Mr. Muthu, George, we'll leave it at that. Thanks very much for joining in. We have to slip into a short break, but don't go anywhere. When we're back, we'll get you more on the markets.
Welcome back. The Valentine's Day color is red for the market, and that's exactly what's playing out as well. It's Friday the 13th, so the street is definitely spooked. If you're a bull, the Nifty lower at around 25,550, the Nifty Bank, the Nifty IT index as well. So both those big cap indices, the Nifty Bank and the Nifty IT, weighing down on the Nifty, even though there has been a recovery from the lows on the Nifty IT index. The Nifty Bank is down 0.75%. The broader markets have it worse. We have the mid-cap index down nearly 2%, the small-cap index down as much as well. And that's visible in the kind of portfolio decimation that we're seeing. Advanced decline ratio tells you that nearly 2,300 stocks, which are in the red, for about a little under 550 stocks, which are in the green. So that's, not making anyone's portfolio look good either. And it's visible in a couple of other things as well. The volatility index, there's been a big spooky spike there. 12.5%, 12.5 is where the VIX is, with a 16% rise, 6.16% rise. The only elements of hope right now for the bulls are two. One, the Nifty is still holding on to the 20-day moving average. So that's an important support. Secondly, the put-call ratio tells you that we're at perhaps the end of this decline because it's oversold now. It's getting below that 0.7 mark as well, 0.69 as we speak. And we are seeing put writing at 25,500. We're also seeing some call writing at 25,600 and 25,700. But chances are from here on, maybe the upside is a lot more than perhaps the downside. That's what the data points from the put-call ratio and the 20-day moving average are suggesting. The Nifty Bank as well, very close to its 60,000 psychological support. So signs of a turnaround, you'd probably first see in the mid-cap index. Secondly, mid-cap IT names. And thirdly, if the Nifty Bank maintains this 60,000 mark, maybe there could be a bit of a pop on the way up. And if it holds above that 25,600 mark, then all those call writers of 25,600 may have to run for cover. All of that in the second half of trade today. We take a short break, come back, get you more on the markets on the other side.
Welcome back. For the markets, still in the red. The advanced decline ratio, very little improvement, still about 4 stocks declining for every 1 stock that is advancing. The rupee has also slipped in trade today. Pull that up for you. It's weighed down by some broad-based dollar demand, and that we understand is because of some maturing positions in the NDF market. Now trading at about 90.74 to the dollar. It's depreciated by almost 0.15 rupees in just today's trade. The 10-year, though, that's reacting well to the news from last night, where the government is going to switch the bonds that were maturing in FY27 to a much later dates. That effectively brings down the borrowing by about 75,000 crore rupees, and that is why you've seen the yields cool off by about 3 to 4 basis points. Apart from that, oil prices, of course, reacting to the IEA projecting a slower increase in oil demand in 2026. The Brent at 67.41 as we speak, and the WTI at 62.69. On that note, we're going to wrap up this edition of Trading Hour. Mangalam and I will take your leave, but stay with us. More news and updates will continue after this very short break.